Congratulations, America. We did it. We just did it. $37 trillion in official federal debt, up $800 billion since they removed the debt ceiling back in July. It's not something to brag about, especially when our debt, the interest last in July, $91 billion, $20 billion more than we put out for defense outlays, only exceeded, in fact, by Health and Human Services, $181 billion. Now, some say for this reason alone, the Federal Reserve should be cutting rates. I want to bring in Bianco Research President Jim Bianco. And Jim, I mean, how much should the Fed consider? We know their dual mandate, but how much should they consider things like, for instance, how much higher interest rates cost taxpayers?
Zero. That is what's referred to as fiscal dominance. If you run down that road and say we have to cut interest rates to make the interest on its expense or how much debt we have easier burden, you never can raise rates again, even if you get inflation. And it presupposes the idea that the level of government is not the problem, because if you make it easier to pay the interest costs, then you make it easier to expand government and you have more of it.
Okay, good. So let me throw this one at you. Earlier this year, the median price for a home, let's say about $460,000. So that means you got 52, 23, 17, 94 million Americans who are essentially shut out. They cannot afford a new home. I know you recently posted about rate cuts not being the solution for the housing crisis. But right now, you got 94 million households or home people who just can't afford a house. How do we fix that?
It's not an easy fix. You're right that if you were to look at the housing market, the other thing to keep in mind is that it's $434,000 is the median home price in the United States. That's an all-time high. So home prices have never been higher. What I fear is if you cut interest rates to lower mortgage rates, the home sellers will just raise their prices and you'll be right back to the same monthly payment that you were with a lower interest rate. The fix is going to be more supply. The problem is building codes and zoning rules that prevent people like developers to build more homes. The American dream is buy a home, then go to your zoning board and tell them that no one can build a home next door to me to keep the price up on your house. And that's how you wind up in this affordability problem.
So earlier today, you had some senior official at the White House floated some names out, possible successors rather to Jay Powell. Very, very dubious looking list to me, but just for giggles, your thoughts about the list.
It's missing your name, Charles. That's what's I'm thinking about the list. I know. It's an interesting list. There's a couple of Wall Streeters on there. There's a bunch of former Fed officials. There's a bunch of current Fed officials. And what's interesting is, as I look through their backgrounds, not all of them are necessarily zealots for immediate and dramatic rate cuts. Right. Lori Logan is on the list from the Dallas Fed. She's been more of a hawk than anything else. So I can't really find some kind of consistent theme among who they're interviewing for this position.
Yeah, they pulled some names out of a hat on that one. But the official betting that you always point to that has shown a major shift in favor of Waller here recently. Waller, the Green Line, he was a dissenter last time. You know, I think he would be a pretty good choice, and I think Wall Street would be accepting of him.
I agree. They would definitely be accepting of him. But remember that was like a couple of weeks ago when we thought there was only 4 names on the list. Now there's 11 names on the list, and we seemingly get more names every day, which suggests that the original 4, leaving Scott Bessent off the list, are lacking because they're continuing to look for other names that maybe the Wallers and the Warshes and the Hassets haven't sold the deal on why they should be Fed chairman. But earlier today, President Trump said he's going to make his announcement very soon, and he's narrowed it down to 3 or 4 names. Yeah.
There's a name I'm thinking about who's not on the list. Also, to your point, it could be a wild card for sure. Hey, before I let you go, market concentration, it was a big problem at the beginning of the year. It's only gotten more concentrated. What are you telling people who ask you about that?
It is an issue. I mean, it is something that you have to be careful of, that if you own an index fund or if you're just a general market player, there's 3 or 4 stocks, that are really driving the boat right now. on and maybe more specifically 7 stocks that are driving the boat right now in the stock market, and your fortunes are tied with them. That's the problem with concentration. You might like certain sectors of the market and certain stocks, but if the NVIDIAs of the world run into trouble, your portfolio is going to feel it.
Absolutely. Jim, good stuff. Appreciate you. Thank you.
Thank you.
All right, so yesterday, folks,